And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets. Welcome back. We had a little break last week, but we are back in full swing here. So let's take a look at what we are going to be covering today. A couple of areas that those of you that watch regularly will be familiar with, but lots of new items as well. So of course, we are going to drill down and take a look at the current markets. How do they stand? We've certainly had a bumpy year-to-date period, but things do appear to be firming up. And then also the reopening trade, and it's hitting one particular area very positively, very strongly. So we're going to drill down, take a look at some of the names there that still have room to go. Also, downtrend reversals abound. This has everything to do with the reversal in some of the stocks that got hit in that February-March sharp pullback. Going to share with you what to be on the lookout for, which stocks are working, and share a couple that are not reversing, and you'll be able to clearly see quite a difference there. And then what to look out for. We are going into earnings season. I'm going to share a tip and trick with you as we go into earnings as a way to pave your way going into this very important quarterly earnings, Q1 earnings due. Base breakouts, as always, I like to share with you some of those stocks this week that did break out of bases. Of course, my background with William O'Neill and Company has me really tuned into that area, as base breakouts can often be the beginning of more extended moves. And then there are a number of stocks that are on their way, similar to that downtrend reversal concept. So lots to follow here. Of course, as always, it's with an eye toward helping you prepare not only for next week, but beyond. We're in, I think, a very interesting, rather exciting, pivotal period here for the markets. So let's take a look. I like to share with you some of the more relevant news items that took place last week. Earlier, or this week. Earlier, we did see the U.S. trade deficit. It surged to a record high. That is underscoring the fact that the U.S. is leading global markets in the recovery. Also, we did get initial jobless claims today. Yesterday, they did rise a little bit more than expected, but there were other numbers as far as core jobless claims that were lowered. So mixed data, no real reaction there. Federal Reserve did come out on Wednesday. They maintained their accommodative policy. Again, generally not a lot in the way of reaction, but good for the markets. Producer prices really heated up in March. That came out today and really quite high. It did briefly bring up inflation fears, but they were quelled. So we do appear to be in a much steadier period here in the markets as far as volatility. Knee-jerk reactions to every headline seems to be a bit in the rearview mirror. Oil prices, that was certainly relevant this week because they were down over 3%. They're still well above 60. If you look at that Brent, 63 dollar level, still healthy, but certainly worth noting. So let's get started. Let's take a look at the broader markets. And I am sharing with you here a daily price chart of the S&P 500 as it continues to march to new highs. And of course, that's a very bullish stance, not certainly back here in March. You can see this was that difficult period. We have emerged out of that and are in a confirmed uptrend. We do have our outside momentum indicators in overbought position. For those of you, my MEM Edge subscribers, I will drill down this weekend a little bit more as far as what to be on the lookout for as far as a potential pullback from that overbought position. And let's move on. We want to, as always, take a look behind the curtain, see how these individual sectors, the 11 sectors within the S&P 500, were on the prowl for strength, because of course that is where you are going to uncover stocks poised to outperform. So we have these sectors. I've added that RSI indicator. I'm going to go ahead and update this so that we have the latest, greatest. We did have a nice strength into the close today. So let's take a look at where we stand. We can see the S&P 500 up here in the forefront. The index was up 2.6%. Nice, healthy advance. I believe it was the fourth weekly advance, certainly at least the third in a row for this broader market index. Interestingly, industrials are up here at the forefront, and I would argue that in the sense that it was up only 1.8% on the week and really has not been, in my work, particularly effervescent. But let's move on because I did want to share with you this group chart of technology. This is an area down here. I was not really alarmed, but dismayed to see a lengthy period of time where technology was really weak. It was in that lower quartile. 2 weeks ago, it was actually one of the worst as a relative performer. But take a look, superior strength up almost 5% this week. XLK breaks out. Lots of just great looking charts in that area. I have to tell you, some real nice looking charts with strength poised to trade higher. Consumer discretionary, that is up almost 4% this week. It is their second weekly outperformance. And this is one area that I'm going to be focusing on. And of course, we will cover some of these tech areas as well. But these are your two strong horsemen, as I like to say, going into next week, of course, and then potentially beyond. Consumer commercial services is XLC, also having a superior week. Now, a lot of these, when we talk about tech, consumer discretionary, and communication services, definitely the FANG stocks are back in play. And those three sectors are dominated by certainly Facebook, Apple, Amazon, Microsoft, Google. So that is having an impact, but I will tell you there is vibrancy behind that and beneath these mega cap stocks. So those are the highlights there. Let's go ahead and drill down even further. I'm going to share with you that same 2-month daily price chart view, but a little bit more in the way of detailed because I do also have the NASDAQ here included. IWM is the Russell 2000 small cap. We're going to take a look at the 10-year yield, which has been really front and center, certainly prior to this week. IBB, biotechs, IGV are software, technology software. We're going to take a look at crude, bank stocks, and transportation. So let's go ahead and update this same concept with that RSI, and it is in descending order. S&P 500 up here in the forefront, the Dow, and then we can see now transports really didn't have such an exceptional week. They were up almost 1%, but they were underperformers again. But by and large, we have seen a generally strong uptrend in transports. A lot of this is airlines, the recovery play, but a couple of sweet spots in rail and maybe one or two truckers. The point is transports doing well is constructive, certainly for the markets. It's indicating the need for goods, purchased goods to be transported as well as individuals. And so as we move forward, there's one chart that from my work absolutely needs to be noted. And this is that IGV tech software ETF. It's an area that of particular focus of mine. Again, my MEM Edge subscribers will know we've had tremendous winners coming out of that bear market and even into the beginning of this year within software. They did get hit as interest rates were really spiking back here in that late February into March period, but they do appear to be reversing. And this for me is certainly exciting, and I have a watch list full. We've had a couple of big winners on that MEM Edge report this week that are poised to trade higher because they are just beginning that downtrend reversal. So definitely a hot spot as far as fishing for new names. And then from here, we can see small cap stocks generally sitting out this week. So we're going to be keeping an eye on that. We talked about crude oil prices, really kind of interesting but disappointing is this relentless downtrend in biotech stocks. This is going to be a riskier area of the markets, and we are in a risk on period, but biotechs just are not participating at this point in time. So we are going to keep an eye on that, because certainly once that group gets going, you can really experience some nice uptrends that will take you further. So we have a little bit here before I need to take a break. What I did want to go ahead and share with you, we're going to take a look at some of those that tip, and not so much trick, but certainly a tip going into earnings. Bank stocks are due to report in a week or so, and then the rest of the market tends to follow. So let's take a look at this one preset screen. And of course, you can find this screen elsewhere, but for ease of use, I'm sharing with you a service called FinViz. And what I'm going to do is share with you one of the preset screens here that is upgrades. So quite simply, it's sharing with you on a daily basis those companies that had Wall Street analyst upgrades. And the relevance here is that particularly if the company is due to report earnings, that upgrade will have significance. These analysts will not put their neck on the line, so to speak, and upgrade going into earnings unless they really have some insight and really feel quite strongly. So here is the list for today, and you can see how impactful that upgrade it was, certainly for a couple of these stocks: Honeywell, ZBH, CCL. I'm pointing out stocks that outperformed today: Harley Davidson, DAN. So from here, I can certainly at the very least start to share with you the charts of these companies that did get upgraded today. And I like to sort that group, that list, by market cap. I want to see the bigger names, and then from there get more of a thematic view. So here we are looking at Honeywell that was upgraded. And for me, I like to understand why. What is the reasoning that Honeywell's price target? It's trading now at about 226, and two different firms upgraded Honeywell today, and the price target is up to as high as 250. And for this particular company, JP Morgan, as a matter of fact, cited Honeywell as the best mega cap setup in 20 years. So what we can see taking place here is the stock subsequently gapped up on volume, very bullish action, because that gap up also pushed the stock out of a base. We also have outside momentum indicators that are looking constructive: the MACD, RSI trending upward. So that is one stock certainly that you want to have on your radar. It also provides a nice yield. You can access that by pulling up this full quote here on StockCharts.com, and it'll tell you 1.6% yield for Honeywell. It also provides you with the industry group and sector that that stock is a part of. So lots of good news there with Honeywell. Let's take a look at another stock that was upgraded today, and it has been upgraded of late. We're looking at Altria Group, the old Philip Morris, and this particular stock has a 6.6% yield, so very nice yield. Did not really get a big pop on today's upgrade, and I'm sure it has everything to do with the stock languishing up here in this overbought territory, likewise with the MACD. But the stock has been upgraded here in the past. Analysts are focused on the company's heated tobacco, not burned tobacco products, that are really seeing traction in South America and elsewhere. Another stock from that upgraded list that really responded nicely. That's another thing I want to point out to you as we go into earnings. Traders, investors, we're looking for guidance. So these upgrades are going to have a bit more in the way of impact. So this is Zimmer Biomet. ZBH is the ticker symbol. And we can see it. Today's upgrade, the stock's up 3%. So it's really on the cusp of having this base breakout at 170. I really like the fact that that MACD is just starting to begin a potential uptrend here. And then we can see that your outside RSI momentum indicator is also in an uptrend. And this is the upgrade is we did see the price target raised up to 200. The stock's trading at about 170. They have a Rosa Robotics division that's being highly touted and other areas for this company as well. One last name that we can look at on that upgrade list as we head into earnings season is Charles Schwab, SCHW, and another name that gapped up on the news, not quite a base breakout. I want to see the stock break up above this 68 level, but it is viewed by this Wall Street analyst as the strongest contender among these online brokerage firms that are continuing to see more and more people trading and actively investing in these markets. We're going to take a brief break. Lots more to cover. And we are back. I am going to start this second half of the show sharing with you some of these base breakouts or certainly stocks poised to break out. And first up here is Floor and Decor, FND. Those of you that have been following or do follow the market super closely may be familiar with this stock. It was a big winner, certainly out of this bear market, all about the recovery play, people staying at home, nesting, improving their home surroundings, and this stock fits right in with that concept. I believe this also was an upgrade that pushed this stock up actually 6% on the day. But really what's going to attract me is the tremendous volume. That's huge volume, gap up, base breakout, momentum indicators just now turning positive. So definitely keep this one on your radar screen. And also, let's take a look at another stock that had a nice base breakout. This is another growth stock that certainly I'm quite familiar with. It's called Boot Barn, and it's among those retailers. So I talked earlier about that concept of the certainly reopening trade, those areas that are benefiting the most. And absolutely, it is these retailers that are really firming up. People, management from several major retail firms are citing that they are seeing a pickup in demand as individuals are gearing up. Certainly out here in Los Angeles, next month they are reopening events venues where you can go see live music and so on. So it's getting real and people are preparing for that. So Boot Barn, we can see it has not quite, but it's very close to breaking out of a base. When I'm looking at these base breakouts, I want to see companies that have precedence. They have the ability to grow their earnings, and certainly this would fit that model. I also like the fact that this stock has sat out for about 3 months. Now, sitting out is very different from deteriorating. Well, that's the bear market, but we're going to look at other examples. But to really just, for the most part, hold tight here and then break out of this price range is quite constructive. So we'll keep that on our radar screen. Let's take a look at another base breakout here, LAZ, and this is another certainly investment services firm, not quite a brokerage firm, but it's in that financial space. A nice 4% yielder. And I did want to draw this for you. For those of you that follow the O'Neill methodology, you may be familiar with this concept, but I felt it was classic enough to share with you this. It is called a cup with handle. And I'm going to go ahead and draw it for you so you can see. So basically, the stock hits a new high, pulls back, comes up close to that prior high, and then has this handle formation from which it then breaks out. So that's where we are with Lazard. Again, a nice yielder there. We can also take a look at one other name that subscribers to my MEM Edge report should be very familiar with. This is Waters Corp, W-A-T, in the healthcare space. We did add it very recently to our list, and it's actually subsequent to being added, had this nice space breakout and is up in a confirmed uptrend now. So that is the breakout side. Now let's go ahead and move on, because I talked to you about this concept of downtrend reversals. We looked at the software space that had super nice looking. Let's take a look at one name in the software space. There are a couple that are, as I mentioned, on my list that are having super good weeks, but we can see Adobe is a stock that has broken back above these shorter term simple moving averages. That is what I would need to see. And then also your outside momentum indicators trending upward. Of course, I want to see this accompanied by upgrades, that the growth prospects have somehow been improved. But we do have, or are very close to, a base breakout here in Adobe. So from here, I am going to share with you a couple of stocks that really got beaten down but are not ready for prime time, and you should be able to see the difference pretty swiftly. This is Teladoc. I'm going to see if I can pull this chart up just a bit, give you a little more in the way of perspective. And Teladoc is a software company that allows individuals to meet with their healthcare provider online, or certainly via the phone. But the concept is that those in lockdown could still seek care. What we are seeing here, certainly with the reopening, is Teladoc really swift drop here. It went from 300 down to 170, significant drop, and it is not having that rebound where it breaks above these shorter term moving averages. So down and out. Another stock that we can look at that was very instrumental for individuals during the lockdown period is DocuSign, the concept that you could sign documents remotely and forward them. The reopening is taking the shine off of this stock as well, although it's a bit further along in its potential downtrend reversal, but it does still have a little bit more work to do. So hopefully you can see that difference. I'm going to share with you, see if I have other stocks here that are in the throes of that downtrend reversal. Let's take a look at a what I'm calling a reopening play, the concept that people are gearing up, getting ready to be more social. This is Align Technology. It is the Invisalign, invisible braces, if you will. So those characteristics I mentioned earlier, I'm going to share with you again. We can see Align back here, late October, gapped up, and it did advance nicely from there. It had another gap up in the beginning of February. Both of these were earnings related. So the company is seeing continued growth as far as new people taking on their Invisalign product. And so we can see the stock pulled back pretty much in line with the markets. We did see growth stocks get particularly hit when interest rates were in that rising period, which would take us to here. But more recently this week, the stock has broken back above those simple moving averages, MACD just trending upward, nice volume characteristics. So this is that downtrend reversal concept that I mentioned to you. Let's take a look at a couple of other stocks again so that you can kind of have them on your radar. Now this is Zebra, ZBRA. It's a equipment manufacturer, electronic equipment, but the stock really held in. It did not get hit similar to other, certainly, names in that technology space, but it is certainly forming the right side of that base. Look for a breakout at about that 520 level, but we are seemingly on the way. I'll share with you one other name because I did want to get to one other area before we need to move on. So this is Yeti, YETI, and the company is really made a name for themselves with outdoor products, coolers, all things outdoors as far as camping and so forth. And so we can see that it's chopped around here quite a bit since January. So we're going to be on the lookout here for a nice base breakout at about 80. We're getting nice volume characteristics here of late, which is constructive. So keep your eye on Yeti. Growth prospects are good for that stock. So what I did want to share with you, again, I talked about the reopening in one area that is really doing quite well. Aaron Swenlin and I covered it in our Chartwise Women's show yesterday. So I am only going to get to a few names here, but be sure and take a look at that show. Pretty much every name that was talked about was up more 2 to 3 times the market today, because again, people are gearing up. This is Urban Outfitters, URB, and it did have a nice move up here, anticipatory, but this week management did come out. They have a division of the company. It is a clothing retailer, and they do have a company that has, it's called Anthropology, and particularly women will be familiar with that because they have a higher end product, and that's where they are seeing quite a bit in the way of growth, according to management, as people are getting ready to get dressed up. They're ready to put their sweatpants to the side and move on. So we can see that the stock has broken up above these simple moving averages, poised to trend higher, and another stock certainly in that space. And this is going to be a little bit more about back to school. Governments are citing that they want to get people, students, back into their schools. They're urging their school districts to do so. So American Eagle Outfitters, AEO, this is one of the names we covered yesterday. It's up almost 4% today, but more importantly, in a nice confirmed uptrend. This is that school age group as far as who they cater to. And another retailer in that space is Zumiez, ZUMZ, also reversing its recent downtrend. What I do want to point out to you here is the nice strong volume characteristics as it breaks back above that 50 with your outside momentum indicators looking quite constructive as well. MACD had that crossover, look for that to get positive. So lots of vibrancy here that you can see. Again, we did share quite a few names yesterday that are definitely confirming that the consumers are, again, ready to put their best foot forward as they potentially can share with others and be social. So I'm going to leave it at that. For those of you that have not trialed, take a look at my MEM Edge report. There is a link below. You can take advantage of a trial for 4 weeks. I'm going to share this weekend my best picks in technology and elsewhere. You don't want to miss it. And hey, give a thumbs up if you like this show. Miss seeing you all last week. Have a great weekend. And until next week, happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.